G'day guys, welcome back to the Devon Too Good investing channel. Today in this video we're going to be doing some projections on where the A2 Milk Company's revenue and net income may be in 5 years. And during A2 Milk's annual general meeting, they did give us this slide here where they've given us a bit of a layout on how to sort of map out the growth to expect over what they call the medium term, which is 5 years or greater. So the company is predicting that they should hit roughly $2 billion in revenue in New Zealand dollars by 2026. And this is going to come from a mix of China label infant formula, English label infant formula, China and their other nutritional products that they're going to be getting into, emerging markets, which they're looking to expand into countries like Thailand, Vietnam, and Malaysia, their ANZ liquid milk, their USA liquid milk, and then they've added a little bit of sort of downside, just in case their predictions don't go to plan. And in terms of margins, they're expecting margins in the teens in the medium term. However, possibly margins in the low to mid 20s in the medium to longer term. And they're pretty much predicating this on higher than expected market recovery and English label channel growth and share gains. So some of the assumptions that have been baked in is that the China label share will double from 2.5% to 5%, that they will recover half of the revenue decline as a result of COVID. So they're expecting about half of their Daigou channel to be reactivated over the next 5 years. Well, not half, but half of the channel that was lost. They're expecting other dairy and nutritional products in China to pretty much grow, and they're expecting growth in new markets as well as slower growth in their liquid milk categories. So what I'm going to do now is I'm going to jump over to Excel, and I've mapped out all these numbers, and we're going to see what growth rates will be required for A2 Milk to hit these numbers. So in 2021, A2 Milk produced $389 million in revenue from their China label. And if you remember back to the slide, A2 Milk in 5 years was saying that this segment of the business was going to grow by 400 million. So I've pretty much adapted the growth rate here to make sure that we grow that 400 million. So this implies a 15.15% growth rate over the next 5 years for China label, which is about in line on what they did last year. And then in terms of English label, the company was guiding that they were gonna grow this by 300 million. Obviously this was one of the main segments where they weren't too sure about the growth, but regardless, based on their estimates, this will be a 13% annual growth rate over the next 5 years. And then in terms of other nutrition, they were guiding that they were going to grow this part of their revenue by 200 million over the next 5 years. So that implies quite a large growth rate of 37% per year. And then also A2 Milk were guiding that they were going to grow the ANZ milk by 100 million. So you can see the difference between this number here and this number here is 100 million. And this implies a growth rate of 9.7% over the next 5 years. And then finally for their USA milk, they said that this would grow revenues by 100 million over the next 5 years, and this implies a growth rate of 20.7%. And then finally they said that they were going to get 100 mil of revenue approximately from emerging markets. Now I haven't put a growth rate in for this because currently they don't get any revenue for emerging markets, and this is something that they will obviously intend to achieve over the next 5 years. And then finally, we've got to account for that $400 million in non-specific risk. And funny enough, when you add all this up, it doesn't quite add up to $2 billion in revenue, like what was seen in the slide here. So obviously they've got some other revenue that the company is producing that isn't within these segments. Maybe it's something to do with like the Matara milk factory or something along those kind of lines. So now that we've sussed out the revenue, we can now have a go at trying to predict what the net income will be in 5 years. So to do this, I've created a bear case, a base case, and a bull case. So in the bear case, we're estimating that revenues will be $1.8 billion at the end of 2026. And this obviously falls short of what the A2 Milk company are sort of guiding us. But of course, this is the bear case. And then the base case is we do reach that $2 billion in revenue. And then in the bull case, we're predicting that $400 million sort of buffer for any downside risk. Where we're just not going to take that into account, and we're going to sort of predict that we exceed expectations and we reach $2.4 billion in revenue. Then in terms of margins, the A2 Milk Company, they were kind of vague, right? They said probably in the teens, but like teens, that could be anything from 13 through to 19% in the medium term. And then they also say margins possibly low to mid 20s in the medium to long term. So I'm not too sure what timeline they're kind of on there, because over here they say medium term for them is greater than 5 years, but to me that would be long term. So I'm not too sure what they mean by sort of these timelines. So I don't know how long they're going to be pulling margins in the teens. I don't know when they're going to be pulling sort of margins in the low to mid 20s, because that makes a huge difference to our valuation. So anyway, for our bear case, in 5 years, I'm going to say that the margin will be 17%, in our base case 20%, and then in our bull case 23%. Then based off that, our terminal multiple, or our PE, out in 2026, in the bear case, I'm going to put that at 15. For the base case, 20, and then for the bull case, 25. Obviously, if the company has higher margins and is growing faster, it deserves a higher PE. So then, based off that, the bear case, they're only going to be pumping out $306 million in net income in 2026. The base case is $400 million, and the bull case is $552 million. And then also we've got to account for some sort of cash on the balance sheet, because historically A2 Milk have kept cash on the balance sheet. So I'm just going to make an assumption that they keep the same amount of cash on the balance sheet as they do now, and currently they've got $800 million on the balance sheet. So once we pretty much what we did was we times the PE by the net income, and then added the cash, and that gives us a 2026 market cap. So in the bear case, that it would give us a market cap of just under 5.4 billion. In the base case, it would be 8.8 billion, and in the bull case, it would be 14.6 billion. And currently, the market cap of A2 Milk is, round about 4.8 billion. So in our bear case, this only represents a upside of 13% or a yearly ROI of 2%, which is terrible, pretty much. You're going to lose money to inflation if you receive this return. So if you think the bear case is likely, then obviously it'd be a terrible investment. And then in the base case, let's say they can get margins to 20% and have revenues of 2 billion. Well, that would represent a upside of 84% or 13% ROI over the next 5 years. Obviously, this is the compounded growth rate. So it's a bit better. It's obviously below my target. I want to hit at least 15%, but if not, strive to get closer to 20%. And then the bull case, let's say everything goes perfect, they exceed expectations, margins are strong, well on the strong side of their guidance, and then they have a decent PE multiple of 25. This would represent 205% on the upside and a 25% yearly compounded growth rate. So that would be an excellent return, but I do feel like this bull case is quite unlikely, and I do feel like some of the guidance that A2 Milk provided could be slightly optimistic, especially since they're so broad with their statements and broad with their timelines. It's really hard to be really confident about any of these numbers, to be honest. And obviously this is not financial advice. This is just me putting some random kind of numbers into a calculator and seeing what it spews out pretty much. So obviously you need to do your own research, but I would say somewhere between the bear case and the base case is probably most likely. I think the revenue of $2 billion is probably fairly likely, but it's really these margins that I don't really know. So let's say they hit the $2 billion in revenue, but they only achieve a 17% margin in this case. That would be a 10% yearly ROI. So it would do roughly what the historical performance of an index fund has achieved over the long term. So obviously it wouldn't be worth putting your money into A2 Milk when you could just invest in the index instead. But that's if this case was to play out. But in terms of likelihood, I'd say maybe the bear case here, there's probably about maybe a 30% chance of this happening. Base case, probably closer to a 40% chance. Maybe 50% chance. And then, maybe a 10-20% chance of the bull case happening. But I'll definitely be leaning something, if I had to guess, I'd be leaning somewhere between the bear case and the base case for my estimation, especially since A2 Milk, their management hasn't necessarily been reliable with their guidance in the past, even though they're, David Bortolussi, the new CEO, has sort of been more transparent and upfront than previous management. But anyway, guys, that's what I've got for this video today. Make sure you like this video, make sure you subscribe to my channel, and have a good one. See ya.